Credit unions aren't mysterious. Most myths about them are just wrong. Most people avoid credit unions because of myths, not facts. They aren't less safe than banks, because federally insured credit unions use NCUA insurance, which works like FDIC. They also aren't only for one job type. Many have community or family eligibility. Membership isn't risky lock-in. You can leave and close accounts. You get real checking accounts, and fees aren't always lower, so you still have to compare. Joint accounts can be protected too, depending on how they're titled. A credit union is built around members owning the institution, not outside investors. Membership equals ownership, but that doesn't mean you own tradable stock. Your shares are just your deposit accounts. Because it's one member, one vote, a person with $50 has the same voting power as someone with $50,000. A volunteer board sets the big policies and hires management to run daily operations. The key catch is eligibility rules, which can be based on where you live, work, worship, or family ties. Credit unions make money in a simple loop. Members fund members. Your deposits mainly fund loans to other members like auto loans and mortgages, and the interest spread. What they earn on loans versus pay on deposits covers operations. Like any lender, they can take losses, so they must build reserves, which are rainy day buffers required by regulators. If there's surplus beyond what they need, it often comes back through better rates or fewer fees. But fees still change your net, and insurance caps, typically $250,000 per owner, per institution, limit protected balances. Choosing a credit union versus a bank is less about better and more about fit. Deposit insurance works the same in practice. NCUA coverage is the parallel to FDIC, but credit unions require membership, so you must qualify first. ATM access can vary widely, depending on shared networks and reimbursements. Loans may be more flexible because local underwriting can consider your full story, not just a score. Digital tools aren't uniform, so test the app and bill pay. Always compare the total fee load, not one headline fee. If you want to join a credit union, a little setup prevents weeks of hassle. First, confirm eligibility, because membership is required before you can open most accounts. Bring the basics: government ID, social security number, and proof of address, since they must verify identity. Then compare fees line by line, including overdraft and out-of-network ATM costs. Verify deposit insurance coverage and how ownership is titled, especially for joint accounts. Finally, plan your direct deposit switch and update bills and autopay so nothing bounces mid-change. Most deposits are only insured up to $250,000 per owner, per institution, so ownership titling matters. BankingHub matches you to accounts based on how you actually bank and shows the real dollar impact for your balance. Free, takes about 2 minutes, and the link is in the description.